And everyone, investors are bracing for some major market events this week with the Federal Reserve's May monetary policy meeting on Wednesday and the U.S. unemployment report out this Friday. We're going to get that unemployment rate in the monthly jobs report. Yahoo Finance's Emily McCormick is here with more. Emily?
Well, Brad, as you mentioned, we're kicking off another busy week in markets, both on the economic and earnings fronts. But of course, the biggest focal point for investors this week will be on the Fed. Now, that monetary policy decision is due out on Wednesday, and it's likely to set the stage for the Federal Reserve's first 50 basis point rate hike since 2000, and also likely to set the stage for the central bank to formally announce it will soon be starting quantitative tightening or rolling assets off its $9 trillion balance sheet. So all told, the Fed is really quickly shifting away from its ultra-low interest rate, easy money monetary policy system we've seen really since March 2020. And that stirred up quite a bit of volatility in equity markets, with the S&P 500 down 8.8% in April for its worst month since March 2020. And of course, a lot of that came on the heels of remarks from the likes of Federal Reserve Chair Jerome Powell, as well as Fed Vice Chair Lael Brainard, each really talking about potentially supporting this case here for a 50 basis point rate hike, as well as that quantitative tightening. But of course, how Fed Chair Powell characterizes the Fed's next moves for the rest of the year for these forthcoming meetings during his press conference on Wednesday is going to be especially important. He's previously assured investors that he believes the Fed will be able to raise rates and roll down its balance sheet without ultimately tipping the U.S. economy into a deep recession. But given that we did just see U.S. GDP growth turn negative for the first 3 months of 2022, that outcome is in question. So we will see what the Fed ultimately comes out with this Wednesday. Now, meanwhile, we've also got a packed schedule of economic reports, including the April jobs report on Friday from the Labor Department. Economists there are looking for non-farm payrolls to grow by a still robust 391,000. There'll be a slight slowdown from the 431,000 that we saw in March, and the unemployment rate is expected to improve to 3.5%, returning to the February 2020 levels from before the pandemic. So still likely a lot of resilience in the U.S. labor market, which again is just likely going to further embolden the Fed to tighten policies. And then finally, of course, do want to give a quick rundown on the earnings season. Those companies reporting in the coming days. We have a number of major firms reporting in the next week, including AMD, Lyft, and Airbnb tomorrow, Uber and Moderna on Wednesday, and Nikola, Shopify, and Block on Thursday. Now, heading into this week, just over half of S&P 500 companies had reported their latest results. So this week's results will really help further solidify or upend some of the trends that we've been seeing in earnings so far. Many of these companies have been beating results, though guidance has been a little bit more tepid. And for now, the estimated growth rate for the S&P 500 earnings stands at 7.1%. And if maintained for the next few weeks, this would be the slowest growth rate for the index since the fourth quarter of 2020. Brad?
You know, Emily, something that's going to perhaps overlap in earnings as well as on the jobs front is particularly how this new surge is showing up in some of the data, to the extent that we can even glean that to this point. We do know Moderna and Pfizer reporting this week. For the sectors that we should be watching closely, though, and particularly with regard to the monthly jobs report, what are you going to be keeping an eye on there?
Well, Brad, of course, I think one of the things we've been watching over the course of the past several jobs report has been this recovery that's still been underway in the services sector. What does leisure and hospitality, what does that job growth actually look like? We've seen, though, over the course of 2022, a little bit of a broadening out in terms of the sectors that have seen some of the most growth. But, you know, I was running through just the unemployment rate as well as the non-farm payrolls numbers that we're expecting for Friday. But one metric that economists have really been closely watching the past several months has been on those average hourly earnings as well. Now, for April, we're looking for a 0.4% month-on-month growth rate, a 5.5% year-over-year growth rate. And all of this is really meant to confirm whether, these labor shortages are producing wage growth that is ultimately going to keep pace with inflation. So far, the answer has been no. But whether this tightness is ultimately going to be benefiting the workers to some degree. So definitely something to keep an eye on in this Friday's report as well. Brad?
All right, really good outlook there. Yahoo Finance's own Emily McCormick. Appreciate it, Emily.